Hello everyone. Today I am going to provide you with a technical outlook over MCX crude oil for the period 3rd of October to 7th of October 22. Prior to that, we'll take a review of our previous week view, which was for 26th of September to 30th of September. So as on 26th of September, the crude oil ended at 6571 levels, and we have mentioned that technically it's within a range of 6,000 and 7,000 under pressure. As you can see here on the charts, this is a weekly chart. The counter has entered into an oversold zone, but at the same time, it has not shown any kind of reversal. And thus, we have mentioned that the crucial support zone for short-term time frame is at around 6,500 to 6,000 levels on the lower end. The outlook which we have mentioned last week was that there is a range to pull back outlook from the lower levels of 6,000 odd levels. At the same time, the resistance will be at around 7,200 and the major resistance at 7,800 mark. So that means till the time crude oil is trading below 7,200 and 7,800 levels, the bias is ranged to down. But at the same time, on the lower end, since the counter is trading in an oversold zone, the counter can witness pullback from the lows of 6,000 and higher levels. Now, if we see how things panned out last week, this is a weekly chart, and here we can see that crude oil made low of around 6290 mark before witnessing a bounce back towards 6870 odd levels, and finally it ended last week at 6539 levels in green, up 1.76%. So since last so many weeks, as we can see here on the charts, the counter is witnessing selling pressure and has reached towards its interim positional support of 6000 mark. 6,000 is a price where we can see that it's a mean price of last almost 10 to 15 years. That means 6,000 is going to remain as a decent support for days and months to come. Though there can be a further dips below 6,000 mark, even it can head down towards 5,500 to 5,000 levels. But all those levels will witness a fresh buying interest in crude oil, and ultimately it is expected to witness a price range between 5,500 to 7,500 mark in days and weeks to come. So for the coming week, we believe that the bias continues to be ranged to pull back from the lower levels. 6,000 for the coming week once again will be important for crude oil futures. And on the higher end, 7,200 and 7,800 levels will remain a resistance. Any pullback toward these levels can witness fresh selling pressure. Overall, we are expecting a range to pull back with downside capped. Technically, crude oil is trading in a oversold zone. So dip towards 6,000 and lower levels can be looked for proportionately buying, and a long covered call strategies can be looked at the lower level. At the same time, pullback towards 7,200 and higher can be looked for contra trading shorts. But reason being, since it has already corrected for so many weeks from the highs of 9650 to the lows of 6290 odd levels, the pullback should not be used aggressively for shorting, but a range bound and premium dilution strategies should be looked into crude oil in weeks to come. In respect with technical strategies, these are the few strategies which we have initiated in last few weeks. The recent was as on 20th of September, where we have recommended buying in 19th of October crude oil futures at around 6837 mark, and we have sold 17th October crude oil 6700 call. That was slightly in the money call, expecting a range bound to pullback strategy. So this strategy is still open, and in last 10-12 days we have seen that crude oil has witnessed pullback from the lows. Earlier, this strategy last week entered into profit of around 4,000 odd levels, 4,000 rupees per lot. But finally, it ended last week marginally in red, down 8,000 per lot. And this strategy will remain open till 17th and 18th, 19th of October till the expiry of this legs. The other strategy was in natural gas, which was initiated on 19th of September. It was also a kind of pullback strategy. It was a very short-term time strategy, just for a couple of days, and that strategy was squared off on 23rd of September on the day of expiry in plus 14188 per lot. The other two strategies recently which initiated was also on 15th of September. The first one was again natural gas. There, the bias was on a short side. So natural gas was sold at 715 with covered bias buying 720 call and selling out of money 640 call in the ratio 1:1:1. So here as per the payoff diagram, we can see the bias was negative with a maximum profit below 640 odd levels in the tune of 60,875. So the strategy ended below 640, so giving the maximum profit of 61,563 as on the 15th of September. In crude oil, the earlier strategy was initiated on 15th of September, and there we have recommended covered call again in the ratio of 1:2. So we have bought 7,000 call and we have sold 8,000 call in the ratio of 1:2. So as per the payoff diagram, we can clearly see that the maximum profit was at around 8,000 mark. But over and above 7175 expiry, the probability of the strategy will be in green. So the strategy of the expiry of this strategy is on 17th of October, and we are still holding this strategy. In the current time, the PL is at around 1100 per lot. Thank you, viewers, for your precious time. If you find our content relevant, then kindly get in touch with us for your queries. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.